Welcome to end month macro for June 2026. Delighted to be joined today, as per usual, by Tom Bradshaw, author of the excellent Beyond the Headlines on Substack. Tom, how are you?
Very good, thank you, Rob. And it's brilliant that the weather's finally cooled down in the UK because we've had a tremendous heat wave last week.
Yes, but it has been quite warm to say the least, quite humid as well, which I do think makes a big difference. But great to have you here anyway. We will start with silver this week, but or this month, I should say, before we do that, just a couple of bits of housekeeping. This video is being recorded at 6:20 UK time on the 30th of June, so it's about 1:20 Eastern. We're near the end of the month as such, so there might be a little bit of fluctuation between us recording and how the markets actually end up. Same with the chart deck. Chart deck will be inserted just after market close on the 30th of June as well. Please do continue to provide feedback. Let us know what you like, what you don't like, what you want to see more of discussed. We do read the feedback. Please do not constitute this as any investment or trading advice. We're not financial advisors. And please do subscribe to both Tom Bradshaw and the Contrarian Capitalist over on Substack. Do subscribe to Tom over at LinkedIn as well. And buttons for that are on the Substack post that comes with this video. I will bring up the screen share, he says, trying to find the technology to do so. And here we are. I'm hoping, Tom, you can see that silver chart as well.
Yep, there it is.
Wonderful. Lovely. Well, as per usual, we are on the monthly. So we have silver down 21% so far, down $15.80. It is currently sat at $59.47. So much so that I don't mind sharing, even I added to my personal position yesterday because I think this is a very good opportunity personally. But Tom, we've had quite a big drop off in the month of June. Have we got any particular reasons why that might have happened?
Well, obviously it's been a tremendous drop. I mean, what's really significant is the month we've just had is even worse than March's decline that we saw with silver. So it is. I mean, it's a huge drop. I think I mentioned in the last end month macro that we had a couple of consolidation months after the big drop in March, in April and May, and we were sort of beginning to form some sort of a bear flag pattern on the chart, and silver was continually sort of testing that $70 level and was kind of bouncing off it. But I mean, obviously, the more you run into the door, the more likely you are to break it down, and that was pretty much what happened. Really, that $70 level gave up, and then the sort of floor opened, and we saw a massive drop this month. Now, I mean, obviously, we've seen the dollar go up over 2% this month. So that's obviously affected silver in quite a negative way because it's obviously a dollar denominated asset and it does struggle when the dollar firms. We've also seen yields remain reasonably resilient around 4.4%. So that's obviously also had an impact on sort of potentially causing downside in silver. But again, I would say this is again just continuous selling from January really, and the fact that we had you know silver is now in a downtrend on the sort of medium term charts going back to January, and I think a lot of traders will continue selling so long as we're in a downtrend. But I think long term holders, as you mentioned, Rob, you've accumulated more. I think a lot of people who are longer term sort of silver bulls are beginning to accumulate at these levels. And I personally think $54 to $56 is a key area of support on the silver chart, and probably is more or less where you bought, Rob. So it's a very good place to have bought some silver. I also think $48 to $50 is the key level. If we do drop below 56, I think I think $48 was where we hit in 1980, January 1980, and $50 was where we hit in April 2011. So those were key pivot highs. What charts like to do when they break out above these pivot highs is retest them as support and then go higher. So that's my view. I think that would be the ultimate area to buy. And obviously, as we all know, my target for silver is $350 to $375 towards the latter part of this decade. So I think anyone that hasn't got silver, this is a great place to potentially pick up some cheap silver.
Yes, we'll get on to something that I think may or may not happen this coming weekend, but we'll do that after we have a look at that gold chart, which I will just bring up now. So moving on to gold, and yeah, hasn't been hit as badly as silver, but at the time of recording, still down just over $500, down 11.29%. We are sat at $4,025. And I think you've just highlighted it very well there, Tom. We've got a strengthening dollar, which we will look at later on as well. Are there any other factors that are affecting gold, or is it a similar narrative to silver in terms of why it's down?
Yeah, very similar, really, I think. And again, I mean, the issue you do have when any assets in a downtrend is you just get more and more sellers coming in, the more it drops. So it kind of self fulfills itself, really.
Oh.
But having said that, again with gold, I mean, we're getting down to very good levels to potentially buy some. I mean, I personally see this sort of 39 to 4,000 level, sort of where the lows of this month are. That's potentially a very good place to accumulate some gold. But all the way down to my key area that I mentioned before was 3,500. That
Mm.
was the April 2025 pivot high, I believe. That is the real sort of, I think if silver dropped down to sort of $48, I think there would be a potential for gold to also go down to that 3,500 level. And that would potentially be the real sort of area to, where we see solid support. And obviously on the upside, I think, we've seen, perspectives everything, because we were trading at around $1,600 in 2022, only 4 years ago. We went all the way up
Mm.
to 600. So we've only lost around $1,600 of the gains that we got, and we got gains of around $4,000 of gains, and we've lost 1,600. So I mean, if you look at it from that perspective, we haven't lost much of those big gains that we got. So that's why I believe we're still in a cyclical bull market. It's just a question of, how long does this last, this correction? How low do we go? And I think it's worth noting, I mean, the interesting thing again with gold is we've had just as bad a month this month as we had back in March. But back in March, we had the strong dollar as well. So the strong dollar is definitely affecting gold in both these months. We've had a firmer dollar in both those months. But again, I mean, gold's down 28% now from the January high. So that's well into bear market territory. And actually, there haven't been many periods in history where gold's dropped as much as this. So with what I'm saying about gold being in a cyclical bull market, I do think, if you see a 28% drop in a bull market, it's definitely potentially a great opportunity to accumulate some gold. And and yes, on the, obviously there's a lot of overhead resistance for gold, but I think potentially this is looking a little bit like what we saw in sort of 2020 to 2021 after we hit the high in sort of July, August of 2020, we saw a correction into sort of early 2021.
Mhm.
Then gold kind of then went sideways. I think we might do something like that a little bit. I think we might drop further, but I think this could all form, on the longer term charts, a really bullish bull flag pattern if this continues long enough. So I think it's just time, really, I would say.
And the one thing I would add, as we said, it is the 30th of June. And the one thing that I would add that I want people to look out for, there's two key dates in July. Actually, there's three key dates. The 13th is my birthday. That's obviously key date number one. Absolutely. But jokes aside, 4th of July is a Saturday. Now, it's the 250th anniversary of American independence and so forth. There is a lot of potential things that could happen on that day from a monetary perspective. And I highlighted this last week. Point number one, nothing can happen. It's a regular Independence Day, monetary wise, nothing changes. Secondly, is that they might do an accounting procedure. Obviously, gold's on the Federal Reserve balance sheet at $42.22. They might decide to just revalue it at, let's call it $4,000, because that's where roughly we're at. And of course, that will have its own knock-on effects. The nuclear option could be, and I've seen the number $20,000 bandished around a lot. They could do some form of other revaluation, and magically gold over Independence weekend is valued at $20,000. Now, hope isn't a strategy, but I tell you if that does happen, I'll be very happy come Monday morning, just like a lot of people will be, if they were to do that. And the reason I say that is because if you have silver at 60 and gold gets revalued at $20,000, well, that's a gold silver ratio of 333.33 to 1. That's not sustainable. I'm just letting you know. So something will have to give. And chances are, if that were to happen, silver's going to skyrocket and it's going to skyrocket to, I don't know what level, but it's going to be quite extreme, which could be quite beneficial. So I'm not saying that will happen, by the way, but I did say at the start of the year that I do think there's going to be some form of monetary event and monetary announcement on the 4th of July this year. And of course, as we've seen, uh, politics and people in play, they like to do things on a Friday after market close, which of course they might be able to do on Friday the 3rd of July because the US markets are closed. And they might do it on Saturday the 4th. Who knows? The other key date is actually on the eastern side of the world. It's the 24th of July. I'll link back to the commodity wrap from last week because that's all to do with, I think, Chinese margins and paper trading and the Bank of China. I don't remember the exact details, but I do know there's a couple of things happening there on the 24th of July. So that they're worth looking out for. That's all I'm going to say on gold. Just keep your eyes open for the weekend ahead. It could be a nothing burger, but if something does happen, then we'll deal with that, I think, in July. Uh, Tom, I'm just let's rattle through platinum, palladium, and copper here. So again, we've seen platinum here down 19%, down $366, currently trading at 1,555. Whereas gold and silver have had a little bit of a, they've hit some lows and sort of come back up. Platinum looks like it's going to finish the month pretty much at its lows. Any concerns here, or does this just fit in with what we've discussed in gold and silver?
Yeah, very similar, really. I mean, platinum obviously had a huge breakout, sort of from sort of the middle of last year, really, and it sort of went from pretty much $1,000 up to nearly 3,000, so 200% up. And again, I mean, it's retraced. I mean, it has retraced quite a lot of those gains, which is quite interesting. But it's worth bearing in mind if we go back to that 2021 pivot high in early in the year. I mean, that's down at around 1,300-ish, 1,350.
Yeah, 1337 is a high, February 21. So
I mean, platinum. I mean, the thing is, when you break out, I mean, that's a key pivot high, standout pivot high on the chart. I mean, when you break out above that a level like that, you kind of, I mean, charts like to retest that level before they go higher. So I think it's actually quite healthy that platinum's going down and retesting that level because I think potentially the charts got a little bit ahead of themselves. And as we saw, back in January, we saw a massive topping tail on the monthly chart, which does indicate a major highs formed. But again, I mean, platinum is a precious metal like gold and silver. It's it will if gold and silver do turn around and that bullish momentum comes back into those markets, platinum will increase off the back of that. The only thing is obviously platinum's not a sort of pure monetary metal like gold and silver are quite as much. Even though it still is a safe haven store of value asset because you can buy sort of platinum bars and everything. So that's the only thing I would say. So if gold's revalued, it's likely to affect silver in a more positive way than say platinum. But I still think platinum will increase off the back of any sort of increase in gold and silver and longer term I'm still very bullish on platinum as well. I think the whole precious metal space are going to see big gains. I just think this is that it's like in the 1970s, gold went up 25x, but it's easy to forget between 1974 and 1976 we saw a 50% retracement in those 2 years. So these corrections do happen when you're in big bullish trends. So that's all I'd really say is just it's more of the same. It's not getting it's easy to get shaken out when the market goes down like this, but seeing sort of the bigger picture is the trend's up. It's just it's just the market's way of shaking us out, really, of our positions, I think.
Yeah, that's fair enough. I have nothing to add on that. So thank you for explaining that, Tom. I appreciate that. We've commented on why the Palladium chart is different. So I don't think we need to go into this again. I'm just going to read out the numbers. So again, Palladium surprisingly only down 10.8%, down $147. It's currently trading at 1,208. And I've just mentioned there, it's come off the lows as well. So that is Palladium. We'll quickly roll over to copper. Assuming I've got the right chart here. So yeah, copper ever so slightly down 2.23%, down 14 cents. Company trading at $6.24 per pound. And again, I think in the last couple of months, whether it's on the end month macros or charts of the month, or any other things that we've covered, I think we've gone through the supply and demand dynamics of copper as well. I don't have anything else to note here, and apart from to say that if you're watching this on video, it might not be that obvious, but we do have the moving averages here. Bear in mind, I am doing this on TradingView, so I appreciate it's different on different platforms. It looks like the 20, 50, 100, 200 are still firmly trending upwards for Dr. Copper itself. So that's worth bearing in mind.
Mm.
Going over to WTI, and I'll zoom in on this chart. Obviously, we've got this thing back from 2020 here. So let me just zoom in on here. It's not the best looking chart. Give me a second, Tom. So what we have here, so this is WTI. Again, 20.6% down, $18 down on the month. It's currently just under $70. It is at $69.66. We could talk geopolitics until the cows come home. Ultimately, I think there's some shenanigans going on in the paper market. In oil, we have seen a lot of SPRs around the world being drained. So, they're trying to push that supply on. I think it's politically driven. We've got one eye, of course, on the extended Independence Day weekend coming up, and I don't doubt one for one bit that President Trump would have one eye on the midterms as well in November. So I think oil's been very politically driven. But for a lot of people to see this is WTI, to see this under, sub $70, that's probably taken a lot of people by surprise. What do you see here, Tom? What are your thoughts?
Yeah, I'm pretty shocked, to be honest, that it's dropped this much. I mean, it is remarkable. We have all the sort of issues we've had in the Middle East in the last few months, and I think a lot of it's down to the fact that obviously we have used a lot of stockpiles up to deal with the energy shock, and I think that's kept. I mean, countries have obviously done a good job at offsetting the shock thus far.
Mm.
But I think the issue is if things flare up in the Middle East again, because I think, when you've used up all your reserves, you haven't really got any defense if things get worse. So I think that's the big
Mm.
risk. I mean, obviously things might just peter out in the Middle East, but I mean, personally, I do think Iran have had a strategy to economically hurt the Western world with oil prices going up. And I don't think they're necessarily a million miles away from achieving that, to be honest, with the stockpiles having been whittled down like they have. So we could see potentially more issues in the Strait of Hormuz, which could cause there to be, a little bit of a sort of walk back on these big losses we've seen in oil in the last couple of months. So that's sort of my perspective. It's definitely something to keep an eye on, I think, moving forward, even though we've seen a huge drop. I mean, we've seen oil down 42% from the highs of March. And
Mm.
I think what's also really significant is the month we just had now with oil going down, nearly 21%. That's the worst month oil's endured since the COVID-19 pandemic. So, when it dropped 55% in one
Yeah.
month. So that's quite to beat last month's drop, but also be the worst month that we've seen since COVID. I don't think that 55% is ever going to be beaten, by the way, because, and I mean, unless we have another pandemic, which, I mean, obviously we had Spanish flu 100 years ago and then the COVID-19 pandemic almost 100 years later, but it's unlikely that we'll see oil ever drop that much. But I think longer term, I mean, if we look at the pandemic lows to the highs in 2022 that we saw, if we see that move up, we look at that bullish move up, and then what oil did after that. So oil from sort of March 2022 through to sort of the end of 2025 sort of formed a bull flag off that move up.
Mhm.
So that's how I view oil. I view it as in an uptrend, but it's just again, it's kind of similar in many ways to gold and silver and many commodities. They've gone up quite fast and they're just retesting the sort of breakout levels before they can then go higher. So I think even if you sort of take what's going on in the Middle East aside, I think oil is in a bullish, long-term pattern here. But I do, obviously, the Middle East will be one catalyst that could push oil up. Another one, obviously, is if we see economic strength coming into the mix, because obviously oil is, when the economies are strong globally, oil demand increases, and then you potentially see the price spike. I mean, we saw it in the noughties, we saw it sort of 2004 to 2007. We saw a big boom in China and in many economies, and that helped oil, go up multiples. So that's another thing that might push oil higher. Obviously, economic weakness could hurt it, but I think, it's an interesting place though where oil is today. I mean, it's got a lot of support around these levels, around $70, and the first, for me, the first major area of resistance is around the $80 area, followed by 88. I think the $80 area is that. I think it was the lows of April. I think were around $80. Uh,
Yeah, 78, 97. Yeah.
so I think that's sort of that's the target if it goes up, I think, the major target. But obviously on the downside, I mean, we could fall all the way back down to 55 if we really give up this sort of $68 area. But I personally think it will take potentially a severe recession for us to drop back down there, I think. I think we'd have to see significant demand destruction. Uh, but yeah, overall, oil's just something maybe to just keep an eye on. But again, I mean, I'm quite surprised we've seen the drop we have seen. But obviously, markets are markets, and obviously the physical market's doing, is a lot different to the paper market, which you mentioned, Rob. So yeah.
Yes, absolutely, absolutely. Yeah, if you're trying to trade oil, welcome to Silver's world. There's always some shenanigans to be had, without a shadow of a doubt. I'm just going to bring up that crude oil. Forget my words out. Again, we don't need to repeat what you've just said there, Tom. This is a crude oil cash market here. Again, we can see, 19.7% down $18. Currently at 73.04. Right. We'll do Bitcoin last, because again, I know all like to annoy the Bitcoin maxis, but we'll do that last. Let's start and head over to the US of A. Let's go to the S&P 500. Relatively muted on the month. It is at 7,491. That's down 1.17% on the month, down 88 points. Obviously, we've seen a SpaceX IPO now. I know that's obviously got more of an impact on the Nasdaq. We'll look at that in a minute. Uh, a lot of mixed messages out there in the markets. What I'll do, Tom, is I'll go through the three main indices first, and then I'll let you give your thoughts. So that's the S&P 500. Nasdaq, again, yeah, it's at 30,254. It's down for the month of June 0.25%. So it's down 77 points. So again, not a lot going on there. The Dow Jones, however, different story, up 2.55%. It's up 1,302 points, trading at 52,341. I'll just quickly do the VIX and Dixie while I'm here. So the volatility index, again, measures the volatility of the S&P 500. That's up 1.34 points, up 8.75%. Currently sat at 16.66, so quite low in terms of everything. And then arguably move of the month, because not many people have seen this coming, is the US dollar index, the DXY, up 2.29%. That's 2.27 points, as I like to say. It is trading at 101.21. one. Uh, Tom, I'll go back to whatever chart you want me to go back to. Where would you like to start?
Let's start with the S&P. I think that's probably the yeah.
Yep.
So the S&P only down around 1% this month. I think if we look at the candle for this month, it's been actually very bullish what we've seen because it's formed a bullish hammer this month. So we've seen sellers coming in, but buyers have picked it back up again. So I'm quite impressed again with the way the S&P's reacted this month to some selling pressure, which does indicate we could have further to go up. But the bigger picture is from the March lows, where we went up around 20%, and we've dropped 1%,
Oh,
which is hardly we've given back hardly any of the gains, which is really quite bullish. I mean, we'll have to see what happens obviously next month, but typically through to September, this is a reasonably bullish period for the market. The market tends to struggle in Q3 a bit, particularly towards the latter end of Q3 into the start of Q4. But there could be tailwinds to push the market higher, over the next couple of months. The only caveat I would say is up to midterms. This period now, the S&P tends to its gains tend to be quite muted up until midterms, and then after midterms, the returns tend to accelerate based on history. So we might see something more muted for the next few months before, this is all kind of assuming that the AI boom continues, but
mm,
I would
mm.
be more I'd be looking at gains more beyond midterms than leading up to them, based on historical sort of analogs that I've looked at. But again, obviously the S&P, is a lot of support underneath. I think that's the real thing. For me, 7,000 points is a really key level for the S&P to hold if this bullish structure is to continue. Because in this cyclical bull market, the S&P has never dropped a key pivot high, and the pivot high we saw in January, where the S&P went up to 7,000 points, is now a key pivot high. So you don't want the S&P to be dropping 7,000 and confirming below that level. Uh, that really needs to be the floor. But again, on the upside, there's virtually no resistance. We've just got that 7,600 level, which is the all-time highs. And personally, I don't see any reason why the S&P can't go to 8,000 if it breaks above 7,600.
Mm.
Because again, in bull markets, what bull markets like to do is get everyone in, get maximum number of people in. The S&P, let's cast our minds back to the dot-com bubble in 2000 and the housing bubble in 2007. The S&P hit 1,500 points twice before
Mm.
falling 50 to 58% twice. So that's the thing. Markets like to kind of break key psychological numbers before pulling the rug out beneath everyone. So I think 8,000 points is that level. It might end up being 9,000 points for all we know, because this AI boom is just astonishing at the moment. We've seen obviously it cool off a bit this month, but it still is, just everything just seems to be going up on the equities front. And should we go over to the Nasdaq, just have a look at.
Yep, absolutely.
Quite similar to the S&P really. This month again, quite a bullish sort of hammer pattern again. You could sort of say maybe that's a doji, but to me it's more of a sort of hammer pattern this month that we've seen. And again, the Nasdaq was up 33% from the March lows up to the highs of this month, and it's only retraced. It's barely gone down really at all. So again, that's quite a bullish sort of pattern to see. Big gains being hold on to, and again, what we've seen is the buyers have again been prepared to buy the dip this month, even though the dollar's gone up, which obviously will pressure even US equities because they are
Mm.
US dollar denominated assets. But yes, I think with the Nasdaq again, key level of support, that $26,500 level, I believe down. Actually, it might be a little bit lower than that. Those sort of key pivot highs from the pivot high from October. What was that at? Was that at
That
26
is,
26,000?
yeah, 26,182 high over there.
Yeah, similar to the S&P actually. The Nasdaq's never dropped a key pivot high in this cyclical bull market going back to 2009. So that's the floor really. That's the key level of support on the downside. But again, 35,000 points we could head to on the Nasdaq if we do break above this month's high. That's what I'm looking at potentially, because again, I mean, there doesn't seem a lot, investors want to go off and have a party, so there's not a lot
Mhm.
stopping them when they do. They just want to, you know, buy everything AI related at the end of the day. So I potentially see this trend continuing unless we see, unless we see an external shock, like maybe issues in the Middle East start getting worse, or maybe economic weakness comes into the picture, really to derail this. Uh, but let's quickly head over to the Dow as well, just quickly discuss. So the Dow's up, yeah, the Dow's outperformed the other two. That shows probably some rotation into potentially some more defensive sectors, I would
Mhm.
say, the outperformance of the Dow. The Dow's seen more of a muted rise since March. But again, I mean the Dow, I mean all three indices have made new all-time highs. That's very bullish. And I mean, I think overall, again for the Dow, similarly to the other two indices, actually, 50,500 is the level that we need to hold above to keep this structure going, this bullish structure. And that was the high from February this year. So again, that's around 2,000 points lower than we are now. So it's quite a lot of room beneath where we are now to get back to those levels, but that's a key area of support. And again, I think for the Dow, 55,000 is probably the next area if we break to new all-time highs, because there isn't really any overhead resistance now. We're sort of in price
No.
discovery mode, really. If we just jump onto quickly onto the dollar,
Yeah,
uh,
absolutely.
so yeah, so the dollars are, I mean, the dollars really affected markets quite a bit this month. I think that's why we've seen so much red is all these sort of dollar denominated assets have been hurt by the dollar going up 2%, especially obviously commodities. But I think, I mean, with the dollar, I mean, if we look at this chart, what's quite interesting is we saw some lows in sort of 2023, 2024, and into 2025. We saw key sort of pivot lows coming into the picture. And they were all around the level that the US dollar is at now, sort of
Mm.
just below sort of 101, sort of around 101 really. So
Yeah.
this is sort of a reverse for what I've said about other charts. The Dow broke, the US dollar broke below 101 points, and now it's retesting 101 points on the downside. So what you'd expect from a technical point of view is that we could well head lower, having hit this area of resistance. Because again, charts like to do this, break below support and then retest it as resistance and then go lower. That's sort of how a bearish pattern plays out. But having said that, I mean, if the dollar does break this 101 area, it could very quickly go up to potentially 104 and then 106. I do think, I mean, this is quite a critical level though for the dollar. If it is to go a lot higher, it will need to break through this area cleanly. But obviously, being back above 100 is psychological. The other thing I draw everyone's attention to is that from the January 2025 high to the July 2025 lows, if we look at that move that we saw down, since July, so over the last 12 months pretty much, since July 2025, we've just been kind of chopping sideways after that
Mm.
big down. Now
Mm.
that's all bearish. So I think medium to longer term, the dollar chart looks very bearish, but we have been in an uptrend since early 2026. So that's the sort of caveat to that. It's, you know, the dollar might have room to go up in the next few months, but whether it's going to go up in 6 to 12 months remains to be seen because this whole pattern is looking quite bearish if you look at longer term time horizons. And obviously, if the dollar weakens, that's going to help commodities. That's going to help, many assets that have struggled over the last few months. So I think that would be the one caveat I would say. Yes, gold and silver have struggled and other commodities, but actually, if the dollar does soften, it could really help push commodities higher. So that would be, I'd be looking at the dollar for potentially to give an impression about whether gold and silver may have some upside coming into them.
Well, look, watch this space is how I describe that. I do think that the dollar ultimately will go lower, but then if everyone's saying that, it should be contrarian of me to say it goes the other way. We'll finish on Bitcoin, but just want to have a quick look around the world in terms of equities. So we'll start with the Nikkei here over in Japan. And again, probably not many narratives to add to it, but we are seeing it is up 7.5% on the month. It is over 70,000. So again, it is tearing to the upside as well. So that's the Nikkei. The Kospi over in South Korea. Now, this has had a very interesting month. It is effectively at zero, um, which might make you laugh because I do remember doing various market wraps in the last month. We had a point where it was, over 9,000 points. Then South Korea, as I said last week, played a game of FAFO when they spoke about the potential of taxing unrealized gains. That didn't go down too well. And then from there, it's actually recovered. So I find this a very interesting chart, Tom. But I imagine you might say that it is also quite bullish, given what you've said about the S&P and the Nasdaq as well.
Yes, yeah. I mean, the only caveat to that is the candle that we've formed this month, rather than it being a bullish hammer like it was for the S&P and the Nasdaq, it's more of a sort of doji, long leg doji candle, and that shows basically indecision rather than buyers picking the market back up. It
Okay.
shows that the market's kind of not sure what it wants to do a bit. I mean, I think. I think it's kind of just the battle lines have been drawn between the buyers and sellers. People are pushing the market down from 9,000 and people are picking it up at 7.4. So it's sort of like it's leaving us with a sort of impression of, well, where do we go from here a bit, really? So it's quite a tricky one. The only thing, I mean, when you see dojis at major highs, it can be a reversal candle, potentially. Now, it's not a shooting star, which would be more obviously reversal,
Mhm.
but it does show that perhaps we have run out of steam a bit here, which isn't a surprise. We've gone from 5,000 to 9,000 in a couple of months. I mean, it's been astonishing how much the Kospi's been going up. So, you know, I I think I think it's a bit concerning that the market still attempts to go much higher this month, having had 2 months like it did. I mean, I'd like to have seen more consolidation rather than the market kind of trying to go higher and ultimately kind of forming a doji and failing to go higher with someone stepping in. But having said that, I mean, I think if we see a pullback, I think 6,400, sort of 6,500 is probably the support level I would look at. Further down. I mean, obviously this month's low would be the first area of support, but that would be the more
Mhm.
significant sort of medium term support level. And again, I mean, when you've gone from 2,400 to nearly 9,000 points, so you've gone basically 6,600 points up, losing a couple of thousand points is not that much, really. It's only around a 33% retracement or something, which, as we know, Rob, Fibonacci retracements cluster around the 50% a lot of the time. So we typically give back half the gains that we've made with, in a normal market. So that's I think it might be due a correction, but I do, you can't argue against a market that's gone up multiples in basically a year and a half.
Yeah, it's crazy. I'm just bringing up just to the bottom right of the screen here. You'll see that the Kospi on the week down 6.68% on the month. Uh, Slight discrepancy in the figure. It says 1% here, but we've seen, you know, anyway. 3 month is it's up 59%. 6 months 102%. Year to date 100.65%, and then in 1 year. So are you going back to the end of June 2020, 2025, sorry. It's up 175.86%. Not a bad return if you had exposure to that. Tom, I just want to bring up very quickly, I just want to bring up US dollar to US dollar yen if I could find the right chart. I think it's this one here. Uh, it is at 162.58. Obviously, there's quite a few problems going on in Japan. You wouldn't know that if you were just focusing on the Nikkei index without knowing anything else. I mean, this is the highest level, or weakest level, however you want to put it, that the end's been in, I think, 40 years against the US dollar. So this is quite significant as well. I just wanted to bring that to your attention. And let's finish off with Bitcoin. Now, I know that this is going to infuriate some people that follow Tom's work, maybe people that follow the Contrarian Capitalist as well. Um, of course, off topic, there's been a lot of, Michael Saylor obviously does a lot of talking. I know Peter Schiff despises strategy and Michael Saylor and all of that comes with it. Um, Again, I can see here that Bitcoin's down 20.7%. It's down $15,229. We're sat under $60,000. I mean, that's the lowest that's been since the month of September 2024. Death of Bitcoin here, Tom, or do you reckon this could take a reverse to the upside?
Well, I mean, we've dropped some very key support levels, and I think it's worth bearing in mind. I mean, Bitcoin from the big drop we had from October through to sort of February this year, we saw the price trend higher between sort of March and May. But the problem was we only got back some of those gains and we formed a bear flag, and now it's played out to the downside as expected. And and really, I mean, particularly the candle we've seen, and we closed near the lows. I mean, there's not much. It's just a big red blob on the
Mm.
chart. It hasn't got any. I mean, we haven't seen buyers really come in to the market at all. Uh, the dollar firming doesn't help Bitcoin either at all. It does like a weaker dollar.
Mm.
I think dropping 60,000 is quite significant actually, because that was the lows of this year before this month. That's a key psychological level to have dropped. And also, if we look across, I mean, Bitcoin obviously works in 4-year cycles. So we had a key sort of pivot zone around that sort of 75,000 level. But if we go back to sort of 2021 on the chart and we look at where Bitcoin topped out there, it topped out just above 60,000.
Mm.
Uh, I mean, obviously we had those long wicks at the top, but the highest closing price of Bitcoin in that 2020, when it peaked in 2021 was around 61,000. I think we got that around October. Uh,
Got October here. November 69,000 was a high. That looks like that's the highest of 2021.
well, interestingly, I did some research into the highest closing highs that we saw with Bitcoin,
Mhm.
sort of the highest closes. And actually, we've never, in a 4-year cycle, we've never dropped the previous 4-year cycle high. We've never done that before. And actually now Bitcoin, obviously we've got a few hours left this month.
Mm.
But if it actually closes below 61,000, it's currently trading at 58,000. That will be the first time Bitcoin is ever closed below a previous 4-year cycle high, closing monthly high.
Wow.
Now that's something you don't really want to do, and on the charts, because it's dropping, it's invalidating, breakout, because we broke above this level and we haven't managed to hold it. And it goes back 4 years, 5 years, so it's quite significant. So, I mean, personally, I think now we've broken below 60,000. I mean, unless we see a big reflex bounce, back to 60 and we confirm back above 60 very quickly, I think we potentially are likely to flush all the way down to 50,000. That's my next area of support. And I believe that's the sort of August 2024 lows around there, around 50,000, I believe. I think we
Yep. Yep.
That's quite a key sort of pivot low on the chart. So I think 50,000 is probably, it's psychological as well, 50,000 for people.
Hmm.
So I think that's the next real target. But ultimately, I mean, when Bitcoin hit its infamous line of death recently, I did flag that we could be looking at 30,000. And I still got my eyes sort of set on that, really, longer term potentially, towards the end of this year. Uh, Based on its sort of 4-year cycle pattern. And I mean, it's only around 50% lower than it is now. And I mean, we've already dropped more than 50% from Bitcoin's highs of 126,000. So it's more or less doing what we've already done now one more time. And it was based that $30,000 target was based on what Bitcoin's done in previous 4-year cycles. So it would be consistent with what Bitcoin's done before. Now,
Mm.
the only thing about that is, as I've mentioned, if we're dropping major pivot highs, it does potentially, you know, it does bring into question whether Bitcoin longer term is going to make the sort of gains it has in recent cycles. Uh, but again, I mean, I do, there will obviously be bounces. I mean, we saw a very impressive bounce from 60,000 all the way up to nearly 80. I think we got to 80,000 from 60, didn't we? From the
Mhm.
March low to the May high, we went up, 30 or 40%. So, for swing traders, there's a lot of potential to make quick money with Bitcoin dropping like it is. But for longer term holders, it's not great to see really. But I think later in the year, I mean, once this sort of bearish, I mean, midterm election years for Bitcoin is never bullish, never
Mhm.
historically bullish, going all the way back, I believe, so I think back to 2014. So it's not a surprise that we've got downside, but I think towards the end of this year, we could start seeing Bitcoin turning around and seeing potentially something more bullish coming into the mix. With the fact that the midterms are over and Bitcoin typically responds better once the midterms are out of the way. So and that would coincide with my view that after midterms, the S&P and other US equities tend to do quite well as well historically. So if we see equities rallying, Bitcoin being a risk-on asset could rally with equities. So that could be something to watch, I would say, moving forward.
And that goes hand in hand with the chart of the month that you went through for June as well. I recommend people go and check that out because there's quite a strong correlation there. You spoke about Bitcoin, so I recommend people go and check that out. Tom, fascinating as always. Really look forward to catching up with you in a couple of weeks for chart of the month for July. As usual, plenty to go through. A pleasure to have you here. And this is, the end of Q2. I guess let's see what Q3 has to bring.
Absolutely. I mean, it's amazing to think we're halfway through the year, actually.
Yeah.
I mean, I never really, yeah, I didn't realize. I mean, it's remarkable. So all these gains we've seen the first half of the year, we could well see, it could be kind of 2 times whatever we've seen if we are to follow on. So annualized, it's 2 times whatever something's gone up or down, maybe. Although
Yes.
hopefully in the case of precious metals, it doesn't play out that way. Because yeah, I do think
Yeah.
it could be better.
Fingers crossed. Yeah, fingers crossed. I agree. And as I said at the start, watch out for the 4th of July, watch out for the 24th of July. And I know there's going to be someone out there that can tell me how many Mondays it is until Christmas. So you get into Q3 when that happens. Tom, thank you very much, and catch up with you in a couple of weeks.
Yeah, very much looking forward to it. And I've got another interesting chart lined up for that.